Hello traders, Ade Forex here, and welcome back to the very first episode or the very first part of the Forex Mastery series. All right, so in this series I'm not going to be beating around the bush, trying to rumble or whatever. I'm just gonna go straight to the point. All right, so because I'm trying to make these videos as short as possible and as educative as possible. All right, so today we are going to be talking about market structure. We're going to be discussing market structure. All right, so starting off, we are going we need to talk about trend identification. All right, like speaking of the types of market that we have, but personally I divide it into two. We have two types of market, which is the trending market and then the consolidating market. Now the trending market is subdivided into two, right? We have the bullish trend and then we have the bearish trend. So let's actually annotate that on the chart, right? So the bullish trend looks something like this, right? So normally what we are going to say is we are creating higher highs and higher lows, higher highs and higher lows, right? Higher highs, right? Now some people just call this higher highs, and they don't understand the logic behind it. They don't understand the reason it's called higher highs and higher lows. Let me actually increase the width. So now the reason this is called a higher low, or let's just say the reason this is called a higher low. Why is it called a higher low? Because this is a low, right? And this is also a low, but this low is higher than this previous low, right? This low is higher than the previous low, right? That's why it's called a higher low, right? And then this is called a higher high because these are two highs, right? But this high is higher than this previous high, right? So that's basically the logic behind the calling it that. But in this video I'm gonna we are going to use another terminology, right? But let's just talk about the bearish trend first, right? So in the bearish scenario, right, we have something like this, right? We are creating what, you guess it, right? We are creating lower highs and low. Oh my god, I fucked that up. So basically in the bearish market we are creating lower highs and lower lows, right? So it looks something like this, right? So this is a lower high, right, and a lower high. Now why do we call this lower highs? Why do we call this lower lows? Why do we call it that? We call this a lower high because this is a high and then this is also a high, but this high is lower than the previous high. And then we call this also a lower high because this high is lower than the previous high. And then we call this is a lower low, right? And then this is a lower low. We call this a lower low because this low is lower than the previous low, right? We call this a lower low because this low is lower than the previous low. So that's the logic behind those terminologies, right? So that's that for that. So let's just quickly discuss the consolidating market, right? The consolidating market looks something like this, right? Normally you see something like this, right? It looks something like this, right? But to be honest, it doesn't. This is not how it looks in the real world, right? In the real market, right? I'm just gonna draw it the way. Although even the trending market does not look like this in the real world, right? The trending market looks something like this, right? We're gonna be seeing something like like this, right? So that's, you just have to understand it, right? But trust me, after this whole series, right, you're going to understand. You are going to have the forex. You are going to be the master, right, of yourself, right? Trust me. So let's just the consolidating market looks something like this, right? It looks something like this, right? So we are moving within a range, right? So we are moving within a range. This from here to here is a range, right? So we are moving within this range, right? We are moving within this range, right? So this is that's why they also call it the ranging market, right? So now the reason it's not ideal for me to trade in this kind of scenario, although we are going to be talking about that in the coming video, right? But I'm not even supposed to discuss that. So just understand it, right? This is trend identification, right? So the consolidating or the ranging market looks something like this, right? So yeah, but in this video we are discussing the trending market, all right? So now speaking of the trending market, right? Speaking of the trending market, we call this a higher high, right? A higher low, a higher high, a higher low. Now let's actually take it further to actually understand it better, right? To understand it better, right? To understand the logic behind it, right? The logic behind it moving towards the upside, right? So now, from my own terminology, I call this a strong low, right? In a bullish trend, right? In a bullish trend, we have what we call a strong low, right? We have a strong low, right? And then in a and then the higher high is called what? You guess it, right? It's called a weak high, right? So it's called a weak high. So that's basically my own personal terminology, although I'm not the one who created this terminology, right? I can't really remember where I got it from, right? But I got it somewhere, sha. So it's this, I call this a weak high and then a strong low. Now, why do I call this a weak high and why do I call this a strong low, right? The reason behind that is because this high is not strong enough to is not strong enough, right, to break a structure, right? To break a structure. Now, a strong low is not a strong low until it has broken a structure, right? So now in a bullish trend, what we have now, let me just use this as an example, right? Now, for example, now we are bullish, right? We are bullish, and we are currently coming towards the downside, right? Now this is a strong low already, right? This is a strong low. Why? Because it has broken a structure, right? But let's assume we are currently going up, right? Like this, we are currently at this level, right? We've not broken structure. Are we going to call this a strong low also? No, it is not yet a strong low. It is just a potential strong low. It is a potential strong. It is not a confirmed strong low, right? Because the market might still decide to retrace deeper, right? To probably respect some sort of point of interest, right, around this strong low, right? To break. So until the market has broken a weak high, before we can actually call it a strong low in a bullish trend, right? In a bullish trend. So that's basically the logic behind it. I hope you guys understand. I hope you guys got that, right? So in a bullish trend, we have weak highs and strong lows, right? So the reason we call it a weak high is because it is not able to break a structure, right? So now let's actually assume. Now let me just delete this, right? And now let's assume. Now we had this, right? Then let's say the market came up here and then broke structure like this. Now what do we call this? Now this was what? Let me annotate it so we can or let me just duplicate them, right? So we have this strong low, we have this, sorry about that. So we have this weak high, and then we have what? Is this a weak high or a strong low? Is this a weak high or a strong low? Now what we are going to call this is a weak high, right? Because it was not able to break a low, right? This is a weak high because it was not able to break a low. But then the market retraced towards the upside, right? And then respected this high, right? So technically this is also a weak high, right? But that's not what we're actually looking for, right? This is the actual strong. Okay, I think I have to so this is now where the bearish scenario comes in, right? This is now where the bearish. So this is now what? This is now a strong high, right? This is now a strong high because we're able to break this low. We're able to break this low. So this is now what? This is now a weak low, right? So we are now currently changing structure, right? We are changing market structure, right? So we are changing market structure from bullish to bearish. So now what are we going to be expecting right here? Let me just bring this like that, and then just what are we going to be expecting after when the market is retracing? So we should expect this high to hold, right? We should expect this high to hold, and what should we expect after this deep retracement, right? So this is a what? This is a potential weak low. Now don't forget, this is a weak low. This is a potential weak low. Why is it also a potential weak low? Because it is yet to be broken. Until this low has been broken, right? After this low has been broken, then we can call this a weak low, and then this is a strong high, right? So until this has happened, right? Let's assume the market is right here. So this is just a potential weak low and then a potential strong high, right? So that's basically the logic behind it, right? I hope you guys understand that simple logic, right? That simple, stuff, right? So I guess I've actually explained. I don't need to explain the bearish scenario because I've actually explained it right here too. So in the bearish scenario, what we have is something like basically what we have in this bearish scenario is we have strong highs and what weak lows, right? We have strong highs and weak lows. So in a bullish scenario, we have strong lows and weak highs, right? These highs are not strong enough to break a structure, right? They're not strong enough to break structure, to cause a trend change, right? Or to break structures, right? So this high was what caused this this high was what caused this trend change, right? So this high caused a trend change, right? So this is obviously a strong high, right? This is obviously a strong high, and then we broke this weak low, and then this is a bearish scenario, right? And then we respected this strong high. This high was not broken, right? So we created a potential strong high, but then after we broke this low, then this was a confirmed weak low and then a confirmed strong high, right? So that's basically trend identification, right? So that's the simple thing we are talking about today in this video, right? So let's actually go to the chart and look at some real life scenarios, right? Let's actually go to the chart. Let me just delete all of that. All right, so here we are on the daily time frame of the Gbpusd, right? So now, speaking of the trend identification, how do we know that this market is in a bullish trend or it's actually in a bearish trend, right? Let's actually identify it, right? Now, starting from here. Now, what do we see right here? Market, we have this low right here. Market came up, right? Created this low, right? Then what can we see right here? Market broke structure, right? So this is obviously so market broke this weak high, right? So this was a weak high. Market broke structure right here, right? And then guess what we are going to call this low? This is a strong low, right? Obviously. So after that, the market retraced, respected this strong low, and then what did you see? We broke structure once again, right? So the market broke this high. So this is obviously also a weak high, right? So this is a confirmed weak high, right? And then what actually caused this trend change, right? It was this low, guys. Don't forget, right? We can have multiple strong lows, right? Some of you might want to say, okay, this is the strong low, right? Some of you might want to say this is the strong low, right? But trust me, personally, I use the low that actually caused the trend change, right? We had this downward candle, right? Downward close candle, right? So this was what caused the trend change for me, right? And so these are our strong low, right? So let's actually annotate that strong low. And then after that, what happened? We had this high, right? So this was our potential weak high, right? And this was our sorry about that, guys, I didn't align that. So this was our strong low, right? So we expect the market to so after the market has broken this weak high, right, and then retracing, we expect this low to hold, right, and then but we expect this high to be broken, right? And then guess what happened? The market broke this high eventually, and then what happened? So this was now our strong this was our strong low, right? Obviously this was our strong low, right? So what should we be expecting? The market has broken this high, so this was our weak high, right? So what actually caused this so after this high has been broken, right, the market went up, consolidated and then came to retrace. So we expected this low. Sorry about that, let me just delete that. Sorry, this was our strong low, right? I'm trying to make this video faster, end as soon as possible because I don't want it to be too long, right? So this is our strong low, right? So we expect this low to hold, right? But guess what happened, guys? We had a trend change. So market broke this low, right? So what actually caused this low to be broken, right? What actually caused this low to be broken, right? Now we can decide to use this as our we can decide to use this as our strong high that actually broke the low, right? We can decide to use it as a strong high that actually broke the low, right? But you need to understand, actually, so we are going to get there. To be honest, we are going to discuss liquidity concepts too, right, for you to understand what market is actually doing. All right, so normally we are supposed to use this high as our strong high because this was the high that caused this trend change, right? The market came here, reacted, respected this strong low, retraced towards the upside, but the market was not able to sustain it, and then eventually we broke this low, right? So normally we are supposed to say this is our strong high, right, because this was the high that caused this trend change, right? But if you understand market structure well, right, this is what you are going to use as your strong high. This is what you are going to use. So we are going to get to that, right? So if you understand liquidity concepts well, right, if you understand liquidity concepts, let me change that to strong high. So if you understand liquidity concept, you are going to understand that this guy can be used as inducement, right? It can be used as inducement. And why do I say that? Because we have you guys might not get this terminologies I'm using, because I assume you guys are all newbies, right? I assume, right? I know most of you guys are gurus, right? You guys are idols, right? But I'm assuming you guys are newbies. So this is a fair value gap. This is I'm going to explain. We are going to get to that in the subsequent videos, right? So this looks like liquidity for me, but let me just delete that. I'm not gonna but we can call it a strong high just for explanation sake, right? Strong high. This is our strong high that broke this low, right? So what should we be expecting if the market decides? So this is what our potential. Don't forget, guys, this is a potential weak low, right? This is a potential weak low, right? So if the market retraces, and then so what we are going to be expecting is, let me just draw this well. What we are going to be expecting, it will be something like this, right? For market to actually respect the strong high to continue towards the downside, right? But don't forget, guys, I talked about the liquidity concept, right? There's a fair value gap right here, so the market might decide to come to mitigate the fair value gap to use this as an inducement to continue towards the downside, right? But I hope you guys got that logic. So this is just the simple trend identification video, and trust me, I hope, and trust me, after watching this video, watch it once more time, but this time make sure you are jotting down. Make sure you jot down every single thing, right? Make sure you jot down every single thing that I explained, right? All just the key points, right? So I hope you guys not only enjoyed this video, I hope you guys learned one or two things. Not only one or two, I hope you guys learned a lot off of this video, right? So in the next video, actually, we are still going to be talking about market structure. So that will be, we are going to be discussing the major and the minor structures, right? And we are going to be discussing the terminology, the break of structure, the trend change, right? So we are going to be discussing that in the next video of the series, right, of the Forex Mastery series, right? So thank you guys for watching, and if you have any question, just drop it in the comment section, or you can actually also just hit me up on on my Twitter. All the links are in the description, right? And also I just created a Discord community. I'm gonna the link is going to be in the description. A Discord and a Telegram community, right? I just created them this previous week, right? So the links are going to be in the description. So if you want to join the community, on the Telegram channel, I'm going to be dropping my my personal analysis and the setups that I take, literally every single setup that I trade, right? I'm going to be dropping them in the Telegram channel. Just join, and then the Discord community is for just community, and everybody can share their ideas, right? It doesn't matter if you trade forex or crypto or whatever. Your space is here for you. The space is here for you, right? You have every single server, every single channel for that, right? So yeah, I hope you guys the best. I wish you guys the best. I wish the best for you guys, and see you guys in the next video, which is major and the minor structures, right? So yeah, see you guys in the next one. Peace out.